Hey guys, this is Julie, J Auto Trading Strategies. I'm going to go over a couple of charts. I want to point out a double top in the SPX, the S&P 500. This is the index, not the ES. So this is the SPX, and we have a double top. So that's very ominous to me. So I think they're announcing this weekend that they've got a deal for the debt ceiling, and you would think that that's going to make the market, euphoric and, rally. But in actuality, that means that the Federal Reserve is going to have to buy $600 billion worth of treasuries bills. And so when they buy these bonds, that is going to take liquidity out of the market, right? Because they're buying bonds, that takes the liquidity out of the market. And that is going to send the market down. So when they announce the deal, potentially tonight or tomorrow, um, ahead of this June 5th announcement, because they have to have time to, get it through the Senate in the 72 hours and all that. So they could very well be announcing it this weekend. Um, I would not be surprised to see this market might sell off on Sunday. I don't know. Well, nobody knows what's going to happen, but I can, with pretty good confidence, tell you that that is a double top, and that's going to have a lot of people looking at that. So, what we've been in over, most of April and May is a very narrow volatility. You can look at the threshold on the bottom oscillator. The first blue line is the 3 threshold, and the next blue line is the 5. So 3 as a threshold, 1, 2, 3, is pretty, normal volatility. You're not going to get VIX, at 20 under 3. To get VIX at 20 or higher, you're going to need to have volatility over 5. Right? So if I put a line on 20 vol, well, get my ruler out again, sorry. Horizontal line, change this to 20. And 20 is pretty much associated with normal volatility. Um, so anything over 20, that is where you're over 5, right? So 5 and under on the JATS PT is 20 vol, pretty much. And sometimes you can get a vol spike over 5, and they tried to get it over 20 here, but they pinned it. So the ensuing spike, they were blocked. They were pinned. They were not allowed to go up. Otherwise, it'll break the pin and go to your outer levels, your 2s and 3s, or even higher. So you can see here we went over 1 vol, and you can see it was very um, elevated, very elevated volatility. So I use the oscillator to tell me where I am in my range distribution and anticipate these outside levels where the market is going to come in potentially. You can do measured moves for these levels. A point 0.5 is 1/2 of the distribution. A meaning from the mean to the 3. So from the mean to the 3, out from the 3 down right here, see that? That level right there is 0.5. So you can draw a level one time the distribution as 0.5. And then you can also, go out 1 and 2. So if I were to put just a 2, a 0.5, a 1, a 1.5 and 2, there we have measured moves as far as inside and out of the distribution. And look, there was 2 times the distribution right there. So it's 0.5 is 1, and then 1 is actually 2 times. So if I measure from, the mean to the 3, looks like the distribution was similar, and then go out, that's 1 time right there. I have 2 different distributions from the open and the close, and this is from the open. And then you can go from sorry. I didn't put the tail on this one. Let me put the tail on this one too. Let me do the same thing. We got to match so you can see it. 0.5, 1, 1.5, and 2, 0.5, 1, 1.5, and 2. And why do I have 2 different lines on my distribution? It's because I can measure from the open and the close. So the session opens and then the session closes, and I'll get my calculations will cover both ranges. So this will allow you to get some idea of where the algos could be coming in. They come in very frequently at these levels over and over. I mean, very, very, very much right on the level, right on these ticks very often. That didn't even get anywhere. It came right back in. And then for the furthest out too, every blue moon that's going to get hit. But I mean, it takes a blue moon to hit it. And, but that is your safe. Nobody hits it right there. So you can see that if you were an institutional trader and you wanted to make sure that you never got hit, that would be an area that I would be looking at. You don't have to buy protection all the time. In fact, you can go a long, long way without buying protection and just using the levels themselves as a trigger. But I would use the volatility down here. The PT2 is an offshoot, so you have points and levels. The levels on top. This threshold down here will give you the points. And also in my market analyzer, I take the point levels versus time periods off of this, and I'm going to show you that in just a second. But anytime you get above 1, absolutely, you're going to be wanting to be hedging. You might even do it at 5.5. I think I think a lot of people would just do it at point 0.5 because that you're breaking your ranges there. So you start hedging at point 0.5. But anything, yeah, above 1 for sure, it means that it's gone, you know, really, really far. But it normally doesn't do that. It stays inside the distribution most of the time. Here's that 20 VIX, went right up to it, came down. And that 20 VIX was on a PT3 that day. You had a double confirmation. That would have been a good vol sell right there, too. Here was another attempt at it, and they blocked it. Another attempt, blocked. And then here they broke it. So that is your, buy the dip and sell the rip. That was your rip sell for your volatility sellers. And this is a good way to do it. You have your deceleration back in. Once that slope flips, you know for sure that well, you don't know anything for sure, but I mean, here you got the descending volatility back in. They tried getting it up and out even higher, and they were crushing it back in. And this again was point 0.5, so they didn't really get it too high above the distribution, even though it was above 20. So they were tamping it down immediately. They were controlling it. Absolutely. Absolutely. And that's a shame because, and here was another um, brief excursion over 20 that got nowhere. They tamped it down good. And I think that's a shame. It's not representative of the market at all with these, high interest rates. We should be above 20. There's no doubt in my mind. So this is just, the way it is. They've got the vol tamped down, and we've been trading inside these standard deviations, and I can measure that pretty well. I've been showing that on Twitter a lot. But we came down yesterday and hit this. It's 0.25. I'll put another distribution up and show it to you. And 0.25 is half the distribution right there. So it only got halfway down. It didn't even get a full way down. But, it's measured moves. And the upside moves are not as draconian as the downside moves. Um, so, and it didn't get above 3. They kept it into the 3 threshold. But having JATs really helps. You understand what the volatility is doing, you can measure it, and then when you can put that together with your SPX and VIX and your ES. ES, of course, did not have a double top. ES went higher than the previous range. Or did it even get higher? Let's see. No, it didn't even make it. The ES is lower. So the ES did not even, it's a little bit of a divergence. Let me put a line. ES did not make it. So that's why we might get up here to this 42.29 and then sell off. I'd be watching this real carefully on Sunday. That right there. Or the 42.35, 50. 42.29.50 or 42.35.50. And why do I say that? Because that is your daily ones, open and close. And again, I think I just mentioned that to you. I can measure from the session open or the session close. Um, and they sell the ones in an uptrend and they buy the ones in a downtrend. So just be expecting to see some offers being lifted here. We'll see, right? Maybe. All right, so here's the market analyzer. Where do we think this can go? Y'all can take a screenshot of this. Oh, I don't have my ES on here, or my SPX. So I've got this set up to show you points on top, daily, 5 day, 7 day, 9 day, 23 day, 30 day, 37 days, and then levels, points and levels. So 1 day distribution, 42.64.75 for the ES and for the VIX. And if we take a look back at that chart, pull the chart back up. Here's your VIX. Um, you can see here 1923, 1917. Um, right here 1917. So I have your 3 open, 1917 right there. So you can see it on the, and then here's your 3 close. Or 3A, 1A, excuse me, 3A, right here, 3A close, 1923, sorry, it's right there, 1923, 1923. So you don't have to have a chart up, you can have it, the levels on a market analyzer, and so you can anticipate where the market might be coming in if you become a subscriber and you would like the tails as well, point 0.5, 0.25, 0.51, 1.5, let me know and I'll do a custom market analyzer for you and get you that every day. So I can get you an Excel spreadsheet. You can get the indicator, make your own levels. You can do a custom market analyzer if you just wanted to do a time period, between 8:30 and 9:30 in the morning. Get that range only if that's what you would like to trade. There's many ways to slice and dice this data using these excellent tools from NinjaTrader and JATS PT. So you get a normal distribution here. As you can see, the ranges break and then you trade to those outside opportunities, and it's usually a measured move of what the original distribution would be um, before the bank algos will come in. So I've got this set up for a 1 day, 9 day, 23 day, 30 day, 37 day, and 90 day. I did it like this for the VIX and SPX because the VIX has that 23, 37, 30 distribution, and I think I have it on the chart here. Let me show it to you. Yeah. So the blue line again is the 20 VIX. The yellow is the 31. So the first standard deviation of the 30 day. And then the 23 and 37 are both white. In fact, if you want, I can change this so that we can see the difference between the 23 and the 37. This is the 37, and I'll make this a blue. Alright, so the white is the 23-day one, the blue is the 37 one, and the yellow is 30. And so you can see by and large, they are going to keep this daily VIX, it's a daily VIX, inside these ones, only rarely does it break out. Most of the times they're selling their spreads, and you'll hear me talk about, bring your spreads in. That's because a spread line is being challenged, but then they'll bring it back in. And here we were challenging the 23-day one, and I was on Twitter saying, did you see them keep it inside the 23-day one, which was amazing to me considering that we've got interest rates being increased and we've got debt ceiling, and they kept it inside the 23-day one. You could see the market tried twice to break out and they sent it back in. But the 30-day one absolutely caught it, and the 23 is containing it. So if it breaks on the debt ceiling resolution and starts rallying, the first thing you'll want to look at is 2281 VIX. Break the 20, go to 2281, and see if they hold it around 2281. Because if that breaks, then you're going to your tails, and it can go all the way up to 33.35 right now on a fear. But it looks like everything resolved, and it's going to be on the lack of liquidity because I think I mentioned this to you. The first thing they have to do right away is buy those bonds to replenish the TGA that they ran down, and that is going to take liquidity out of this market, right? So once they start buying a bunch of bonds, it takes the reserves out of the bank accounts, right? Because they have liabilities and debits and credits. So buying the bond is going to reduce the liquidity, and so the market is going to sell off, in my opinion. So just be prepared to see higher volatility. I don't think we're going to get a low vol sell off. So I'm looking to see this 1921 break, 2113, and then 2281, and then go to 2514, 2868, and 3335. We'll see. But you can come in and make a market analyzer for any market, any time frame. You can do anything that you have data for. So if you have an Interactive Brokers account, you can use an NinjaTrader platform, bridge it to your Interactive Brokers account so that you can be reviewing this data for your ETFs, for everything. But this will work on fixed income, it'll work on currencies, it'll work on energy, it'll work on gold, metals. It's the same for everything. So map the markets, get your, I can help you with market analyzer templates and get you set up. Go to the website. Let me show you this, and I'll make mention to you real quick that we are working with Secure Team. Very happy that they're working with us and developing the JATS indicator for web interfaced platforms. So I'll be on Ninja Web and Tradeovate in the near future, and we will have it maybe set up for other platforms as well in the future. So keep an eye out for that. You can get the JATS PT indicator as a subscription at the moment for NT8, and I can get you Excel files, or maybe in the near future also we are going to update the website and offer a live stream of charts and levels. Maybe have an energy stream, a metal stream, fixed income stream, currency stream, um, so that you can just log on to the internet and take a look at your levels there without even having to need a platform at all. So that's something that we're have in the pipeline. So we'll get you the JATS levels however we can. So just keep your eye out for that. Definitely, I think the best thing to do is have, the best of the worlds is have it on your desktop so that you can go to your market, put the indicator on, and then track it as it's going up, breaking the levels and going to the weekly dailies. This went to the weeklies. Let me just show you. Broke my dailies, went to the weekly, and then we do have, the ability, to see that happen. Let me put a weekly on here. Not sure if it was a weekly open or close, so I'll put both of them on. But there's no comparison to be able to just throw up charts, look at where your levels are. This weekly one is right here on our daily one. So I think that's going to be a really high opportunity there to hit that target. Your halfback for this weekly one, here was this one, right here, is the one that contained the trend. But it was the NQ that broke its levels. Let me change this to the NQ real quick. And it hit the weekly ones. So it's already tagged past the weekly ones to the weekly twos. Give this a second to populate. There it goes. Weekly twos. Threes. Weekly threes. My goodness. We hit the weekly threes on the NQ. That was a monster rally. And you're right here. Your daily ones are sitting right above it. So, weekly ones above that. But I would be very careful going into Sunday, Monday for that reason. But having the ability to see this on your chart really helps you come in and visualize that when you get the break, we got, you can see it came into the weekly one. It held it here at the daily three, came back, approached it again, got rejected right at the level, and then it broke out on this big giant bull bar, gigantic bull bar, and it just went parabolic all the way to the weekly three, and I had it right there on the chart, tracking it. Just amazing move right here. So having it on the chart, there's no substitution, is what I'm trying to say. I mean, it's nice to have the levels if you don't have the NinjaTrader platform, but if you have the NinjaTrader platform, you're going to want this on your chart. All right, guys. Y'all have a great weekend. Um, Thank you to everyone who served. God bless America. See you next week.